It has the potential to destroy lives. It certainly has the potential to destroy confidence.
Welcome to the Digital Customer Comms podcast, where we discover how leading regulated companies engage, retain, and delight customers at scale. Today, we're shining a spotlight on one of the fastest growing threats to consumers, money muling. With fraud ever growing and new data revealing a worrying rise, protecting consumers and their bank accounts when you're communicating with them has never been more important. Today, we've got with us Stephen Dalton, Director of Intelligence at Cifas, which I just had to look up, stands for the Credit Industry Fraud Avoidance System, a not-for-profit UK fraud prevention membership organisation. Stephen leads the team analysing nationwide fraud risk data. Hi, Stephen. Welcome to the podcast.
Hi, Sam. Thanks for having me.
Thank you so much for taking the time. So, money muling. Many people might have heard it bandied around. They might not know what it is. Can you explain what it is and why it's considered a form of what you call first-party fraud?
Sure. Well, money laundering is a term that's used for the activity of laundering money that's been acquired through crime. So that could be, through the sale of drugs or theft of monies or fraud in a lot of our cases. And it's the act of an individual who's working on behalf of somebody else, and they're often using their own identity and their own bank account or other financial products or services in order to move that money from where it was originally acquired through their account into other accounts, and that effectively is cleaning that money up so it doesn't look like it's the proceeds of crime. Now, they'll often get paid a commission. They'll take a cut of that money in order to sort of facilitate that activity. Some people are very well aware of what they're doing and that it's an illegal act, but others might be unwitting. They might think that they're helping somebody out, they're doing a favour, or in some cases might even think it's part of a job that they've taken on as well. So it's quite challenging to work out which are the complicit and then the non-complicit individuals involved.
You recently released some data from the National Fraud Database?
So yeah, Cifas holds the largest database of fraud risk in the UK, and that's called the National Fraud Database. We've got 800 members from across a wide range of different financial services sectors, from banking, credit cards, building societies, alternative lending, telecommunications, and also local authorities are members of Cifas, and they all contribute cases into the database that then is shared amongst the rest of the members so that they can protect themselves from fraud. And one of the categories that they file into is what we call misuse of facility, and that is where individuals will take on products and services and they're not going to use them for their genuine purpose. So in this example, they'll be abusing a bank account by using that to pass money through it that's obviously been gained from illegal means.
And does that data then give you an idea of how widespread this is? Do we know how widespread it is?
Yes. Well, I mean, in addition to us, organisations like the National Crime Agency look at the impact of money laundering. They estimate that there is in the region of £10 billion laundered through UK every year. Cifas last year saw 34,000 cases filed to the National Fraud Database. So that's an average of 95 a day. And our members are certainly telling us that this is a significant ongoing issue for them, and it's quite challenging to try and tackle. Now, it's actually a slight decrease we've had filed this year that compared to last year, around about 3,000 less. But we don't think that's because there's less money laundering going on. What we think is happening, that's an evolution of how the cases are being handled by members.
Can you expand on that a little bit? So how does that work?
Yeah, so a large number of money mules appear to be younger individuals. They're enticed into the activity because they see it as easy money. They perceive it to be victimless and there's no consequence to what they're doing. Some people are lulled into it under misapprehension, so they may think that they are for example, in romance fraud cases, individuals are asked to move money around as favours for their perceived the person that they're having what they think is a relationship with, and effectively they're being they're being sort of taken advantage of. And in other cases, we have examples of individuals that have taken on what they think is a job that involves some sort of executive assistant role where moving money around through their account is part of the role. So they're not even realizing what they're doing. So as I said earlier, you've got this issue of complicit individuals that actively know what they're doing is wrong and non-complicit. And banks recognize the impact of an individual being filed as a money muler and the impact that would have on their ability to transact normal daily life. And they want to be sure that they're dealing with a complicit mule rather than a non-complicit mule. And certainly in the case of when it's really young people that are getting sucked into this, that's quite difficult to establish, and they would err on the side of caution. So that may be one reason why there's slightly less filings this year than there were last year. Another reason may be that we know that the organised criminals that are behind this activity, that are recruiting young people into this world, they understand that as well, and therefore they're actually coaching people to say that they've been a victim and that they've been duped into it. So trying to work out which is quite a challenge for our members, and therefore they need to be absolutely certain before they make that filing.
It does sound like a challenge. And you mentioned specifically they're young people. That's, I suppose, what could be considered a vulnerable category in some sense, in the sense of not being as aware as others. Are we looking at other vulnerable categories of people being affected by this? Is there a typical sort of profile?
Well, we can certainly say that from our research, in terms of the cases we're seeing, that the younger age group definitely feature most prominently. 19% of the cases that were filed to the National Fraud Database were individuals that were under 21, and some of the fastest growing areas are in that sort of 18 to 19 bracket as well. Overall, 61% of all the cases filed were individuals who were under the age of 30. So it's definitely the younger end of the market that organisers are attracted to try and target. In addition to that, there is research to show that it's predominantly males that are involved. That's not to say that it's all males. We know that there are some vulnerable people that are looking for an emotional connection and get taken advantage of through romance scams, and they'll often become unwitting mules, or that they are just simply lonely and wanting to build a relationship. So that emotional vulnerability or financial vulnerability, somebody that's unemployed or not got a lot of money and is looking to try and ways to make money, will often be exploited and used in these sorts of situations.
So there's that kind of vulnerability aspect that can make you more susceptible to this type of attack. And then are there any aspects of, poor data protection or habits that would make you more of a target to this kind of attack? I'm thinking about our listeners who may have clients and customers that they're communicating with. They hold their very sensitive data in regulated industries. Are there ways that they can better communicate with them more securely in ways that won't make them as much of a target?
I think from the point of view of a business talking to their customers, then there's an awful lot that can be done around education and awareness. So understanding of the sorts of ways that you can get attacked in this sort of brave new digital world that we're in. So the term phishing, so when you're receiving emails that are enticing you to click on links, and obviously in clicking on those links you can download malware that then steals your personal data, or you can click on links and end up getting engaged in what you think is a legitimate business transaction and it turns out not to be, and then you've disclosed your information. Or even just generally as an individual that sort of has poor sort of online security awareness, understanding if you've got an open profile on social media or you're disclosing personal information in your social media chat, that all of that information can be hoovered up by online criminals, recycled, repackaged, and then sold on. And often those individuals will use that information to then sort of target you. So for businesses, it's understanding and protecting their customers, so making them aware that this activity is going on so they can do more to protect themselves.
In terms of the social media aspect with young people, you mentioned that. Is that what's kind of exacerbating the issue for young people, that there are so many different ways to connect now with people that you don't necessarily know?
I think so. I mean, social media has always been a bit of a highlight reel, isn't it? You can see people live what appears to be living an amazing life through their social media posts, and certainly it can appear to be a very easy way to make money. So there are potentially unscrupulous influencers or even naive influencers out there who are promoting this sort of activity, not realizing what it is exactly, and that will encourage others to sort of get involved because they think it's perfectly legitimate and harmless. I think also social media, there are a lot of lures within social media, the advertising for these fake employment jobs, which we know are actively used by organised criminals to encourage people into this money muling activity. That's a significant issue. So I think social media is a big driver for this, and obviously the recent publication of the online harms codes of practice that have been brought in by Ofcom is welcome, and obviously we'll look to see that social media start to act on these obvious sort of lures that are present out there in the cyber world.
So what kind of thing does that actually enforce, or what guidelines does that give media companies?
There's some new codes of practice that have been recently published by Ofcom, and that's going to require social media companies to take steps to make sure that what they're seeing on their platforms and the services that are being offered and provided are legitimate, proper practices and services. And if they're not, they need to be taking those down.
So to prevent that misuse of facility.
Well, to prevent those individuals who are more likely to get sucked into that world, to prevent that happening, essentially, yes.
We're talking about vulnerable people. If you think, who would be a good target for most types of attack, you generally think, well, the people with lots of money who are less aware digitally, and, retirees and older people. Is that a category of people that you see involved in this type of fraud, or is it more that social media based?
Well, they're the ones that are likely to be the victims, whose money is then stolen, because they're handing over their money. So in the example of a romance fraud, the fraudsters will essentially build a relationship with an individual, a vulnerable individual person. That person thinks they're in a genuine relationship with the third party. They may think that the fraudster is, a young 20-something model, looks amazing, just needs a little bit of help, when in fact they're dealing with a much older male fraudster, but they've obviously assumed an identity. They'll extract money from that vulnerable person, and when they've got that money, they now need to exit. They now need to find a way of getting that money, accessing that money, and that's where money muling comes in. So you then have individuals who won't necessarily be directly connected with the actual theft of that money, but they're essentially helping move that money around, splitting it up into different accounts so that it's not easy to trace it, and that will mean that the person who's behind the actual original fraud is gaining that benefit.
I imagine that AI is also having a little bit of an impact here as well. If you think about any of these areas, building a list of targets, creating personalized messages to send to them, these kind of things can all be done with AI now. How much is that already happening, and how much should we be concerned?
Well, we're certainly seeing AI being used to create fake profiles. So it's much easier to do with generative AI. So it helps you out. It's sort of socializing or democratizing fraud effectively. So whereas before you'd need to have a reasonably high level of skill to create fake profiles, to generate emails, fake emails, phishing attacks, that sort of thing. Nowadays, with Gen AI, the ability to do that is going to become much easier, and it's lowering the bar of entry effectively for fraudsters. So the potential for there to be a lot more of that is going on. Those profiles can also be the sorts of things that individuals will see on social media. So there'll be the lures, if you like, into fake jobs or into a fake romance and those sorts of situations. So AI definitely has the potential to sort of turbocharge this. It's one of those things that's there, and it's still, I think its potential hasn't yet been realized. The other thing that AI can do as well is obviously it helps the fraudsters in terms of how they can extract the money and help them move it around. One thing I would point out, though, is everyone's talking about AI and it's this sort of doom scenario of how it's going to take over the world. AI can also be very helpful to organizations to tackle fraud. So using AI to understand what's going on within your customers' accounts, the behaviors that they have, the transactions that account, that real-time monitoring is something that will be turbo boosted by AI and will absolutely assist organizations to try and defend themselves from this sort of activity.
And that's the kind of thing that you work with companies and organizations on. It's not something that you can imagine an SME, a financial advisor or something using. So if we look from that scale first and then up to the analysing customer data and behaviour, what telltale signs would there be for, say, an advisor dealing with one client that their client might be going through this?
Yeah, so I think the obvious one is a change in behavior. So if that client starts to behave in a different way, if they start wanting to move money around, if they're not really providing consistent details as to why that they're moving money around, or even if they give indications that they're moving money because they've got a friend that's in need and they're overseas. So those sorts of things will be obvious red flags. Where money is coming in, unusual sums of money suddenly appearing where they weren't appearing before, and that money then moving on to other accounts, again, that don't appear to have an obvious connection to your client. Those would obviously be red flags, and those are the sorts of situations one needs to be then considering what actions to take. I think in addition to that, if one is talking to a client, it's, what are they saying about this movement of money? Are they able to provide sort of some consistent and sort of logical explanations for why they're suddenly receiving all this additional cash and why they're needing to move it around? As I say, they may well have been duped and they may think what they're doing is perfectly legitimate, in which case they may well be disclosing some of the what's gone on to that advisor, and that advisor will be able to recognize that.
And most advisors should be and will be doing this already.
Yeah,
AML
absolutely.
regulations helped with that.
There's plenty of advice. The Financial Conduct Authority can provide sort of guidance on this sort of stuff as well.
So then when you look at scaling that out to a large organization, is that the kind of thing that AI would be helping with? Analyze conversations with customers, the behavior of customers in their accounts for irregularities?
Absolutely. That's what AI can do at scale. And that's the great beauty of AI, is its ability to sort of look at things at scale, large volumes, and do it very quickly, and obviously find things that then need to be assessed and investigated in more detail by a human. And that's the great sort of potential benefit of AI. That's looking primarily at, that can be more behavioral around how the account is managed. There have been for some time now machine learning models that look at transactions within accounts and obviously identify where those transactions seem to be going against the norm of what a customer's previously done, and highlighting those potential risk transactions. So AI will just continue on that sort of journey, if you like, looking at that activity, and which will obviously be a massive benefit to organizations. And organizations are already investing in those technologies, and there's lots of companies out there that are developing those new technologies. In some ways, it's a challenge to try and keep up with them, because by the time you've procured a solution, there is always the danger, because it's moving so quickly, that there's something else that's even better than what you've just got.
Yeah.
So it's important for organizations to be plugged into that world and understand what's going on.
And that's just one element of fraud prevention. There's also the ensuring proper login and password management, the front end stuff that the user interacts with, or the consumer interacts with. Do you think that there will be new types of this user-facing technology needed to prevent fraud? And, is that going to create a barrier for consumers interacting with businesses?
I think there's always there's a balance to be struck. And I think business recognises the need to try and sort of build robust controls in place and prevent this sort of activity. The regulator absolutely demands it as well. I think there are always new innovations coming along the way. Cifas has a protective registration scheme, which is designed to help victims of impersonation, so individuals that have been impersonated and then their identities have been used to sort of take out financial services and products. We're developing a new version of that's much more consumer facing, which will allow consumers to sort of effectively own and understand the risk. So members, they'll actually sign up to an application. Members will be signed up to that application, and where an individual uses your identity to take out a loan or a credit card or a bank account, that sort of banking member would use the app to actually reach out to you and say, just checking that you are the person that's opening this bank account. So that's an example of something we're developing. And organizations are always looking at sort of new ways that they can sort of protect their customers and themselves from obviously this activity.
Because I suppose communications themselves can be a great way of preventing this kind of fraud. The more that you communicate with customers about the irregular activity on their account, and we're seeing a lot of that happen, like you say, in a kind of app-based way. Is there a way that email and text and this kind of more omni-channel communication stack that we're working towards can be used more preventatively to communicate with customers, to tell them about activity regarding their account in the most reliable channel, the most consistent channel for them?
Yes, I think so. I wouldn't disagree with any of that. I mean, communicating, I think, is the key thing here in terms of engaging with your customers so that they understand, I think, not only the risks, but also what you're doing as an organization in order to protect them. That's probably the most important thing, because it's very easy to, there's a difficult balance, isn't there, to get between. You don't want to create the impression that this is a world that they don't want to engage with, because we have to do that now. So it's about emphasizing what is it we're doing as an organization, or you're doing as an organization, in order to protect your customers, and how you can help them protect themselves.
Yeah, it must be very difficult to walk the line between fear mongering in your messaging, and being positive and proactive and enabling, because you have this big role to play in that education piece.
However, if you don't do that, the alternative is, if somebody does become a victim, there is obviously the financial implications of that. And we have got the reimbursement scheme, which is designed to protect individuals. And that's absolutely great news. But we know from research that where people have become victims, that completely destroys their trust and faith in the sort of the digitally enabled world that we're living in. That's the way you have to access these products and services. So it's absolutely incumbent, I think, on organizations to sort of reach out to their customers to make sure that they understand, and also what they're doing as organizations to protect those customers. Otherwise, if people continue to be victims, it's not just that the financial losses, it's what it does to them in the longer term, and the consequences of that in terms of undermining confidence in the environment in which most businesses are now operating.
Do you have any advice for businesses as kind of the leader in educating on this, for how they go about that education? We know that educating customers, educating the market is something that's very difficult to do. Behavioral change is very difficult to instigate. What have you found has been most successful in terms of campaigns, messaging?
Well, we've launched, particularly around the issue of money muling, we've launched in conjunction with UK Finance a campaign called Don't Be Fooled, and that's aimed at it's aimed at those individuals that are going to be most targeted, the youngsters, so potentially students and young people. So we're aiming that at educators. So we've worked with, as I say, UK Finance to develop lesson plans around sort of how you should manage your money, and that obviously includes, what fraud is and how that works, and the dangers of fraud, and obviously the dangers of money muling as well. So that's one of the things that we've done in order to try and sort of promote an awareness of the issues and the problem and the risks attached to it, because I think often, certainly young people, don't think through the consequences of their actions. As I say, they think this is relatively victimless. They don't realise that this money's actually been stolen from. This is somebody's life savings potentially that they're shifting around. They think that it's all going to fall back to the big corporate business to deal with it, and they don't really fully understand that what they're doing is criminal, and that could end up as in a prison sentence at the worst, and at the very least being filed to Cifas, which is then going to impact their ability to access financial services and products moving forward. So that's an example of a campaign that we've run. And I think for organisations, it's about being aware, looking around at what there is out there. Cifas has a learning academy, so members can sort of plug into that learning academy where there's different sort of courses on different types of fraud types and activities as well. But there's lots of guidance. Lots of trade associations will have guidance and best practice guides and things to do to manage the risks and problems. As I say, we mentioned the FCA earlier. They've got codes of practice and guidance around this sort of activity as well.
Like you say, there's so many bodies and so many companies that are producing this kind of information. It almost becomes a problem of, like you mentioned earlier, how to keep up once you've got that foundational knowledge. Where do you go to keep up?
Well, this is where AI can help you, because you've now got all these very handy little AI tools, ChatGPT, Copilot, Microsoft Copilot, for example. There are others, of course. That's a good way for you to sort of keep up to date, is to sort of ask that to tell you what's going on in terms of legislation, in terms of what best practice can look like in terms of how to tackle some of these activities. But it is a challenge, but it's one that we have to confront if we're going to be able to do something about it.
And are there any blogs, email newsletters, any new research that you can recommend, bar from Cifas, of course, to our listeners?
Well, there's a don't be fooled campaign, which that there is a website, so you can Google "don't be fooled" and that will take you to that one. There's lots of blogs. I'm not sure I'd want to sort of pick out too many, because they're so varied and it all depends on what your particular interest is. But Google and then have a look around and see what there is really. But there's lots of organizations offering advice or offering trend analysis on what's going on. They're obviously promoting their services, but they can provide good insight and good knowledge as to where to go to next.
So I think we have to let you go soon, but one last question. If you had a core insight about money muling for listeners, or a core example or story, anecdote to give them, what would it be?
I think the key thing is understanding it's not victimless, that the money that's being moved has been stolen from somebody's savings or their pension. This idea that they're going to get reimbursed, that might happen, but it's not always going to happen. There's certain conditions need to be put into place for that to happen, and it might not be the money has been lost in the way that can be reimbursed. So it has the potential to destroy lives. It certainly has the potential to destroy confidence. So be careful and be aware of the fact that you could be getting sucked into something that is really damaging and dangerous. There are lots of tools coming online now that organizations are using to detect this sort of activity, and the chances are you will get caught and the consequences could be really severe. For money laundering, for example, it's up to 14 years in prison. Be careful, be aware. Don't get involved.
And for larger organizations who might want to put on training programs or deploy this kind of tech, are those the kind of services that you work with organizations on? Is there a way for them to contact you?
Yes, they can certainly reach out to Cifas. As members, we have, as I say, a learning academy. There's 3 pillars to what we do. We have a national fraud database, which is designed to be a framework for members to share information and data, personal data on individuals who have either been victims or are involved in fraud activities, so that protects the members. We have an intelligence function that looks at the wider trends in terms of what's going on, and we provide that to our members. And we also have a learning academy as well, where we provide training in fraud awareness and fraud prevention and other courses as well. So by all means, reach out to us and see what we can provide.
And if anyone wants to contact you directly, can they reach out to you on LinkedIn or something?
Yes, I'm on LinkedIn, certainly, and also I'm available, as I say, through the website at Cifas. If you make an approach there, I can certainly come back to you and talk to you.
Fantastic. Thank you so much for your time and your insights today, Stephen Dalton from Cifas. I'll get it right this time. Thank you for your time.
No problem at all, Sam. It's been an absolute pleasure.
Cheers. We'll speak to you soon. Thanks.
Bye-bye.